Thank you so much for coming, Brett. This is, again, another time, a big time, actually, in terms of the economic data.
Sure.
GDP came.
Sure.
And what was expected? Minus 0.5. But what came? And then what are your thoughts?
It was a disappointment. And we continue to feel as though we've been doing a lot of propping with low interest rates. And we don't really think the demand is really there. They keep pushing it off. They say it was a bad winter. But we really feel as though copper has been very weak, and the economies are not as strong as people think.
The economy is not as strong as people think. Is it temporary though? There is a saying that this could be temporary due to the better, we had a really harsh winter.
Right.
And then due to the demand not being where we want it to be. Is it temporary, Brett?
No, I don't think it is. I actually think that we had a very, very large boost of demand after the 08-09 period. But I think a lot of that has been taken, and I think that it's going to be much more difficult going forward from here.
And now, looking at the terminal before we started also the program, what did we see? The greens, right? Equity markets are in the green right now in spite of the not so good data. Well, how do you take that?
I think that everyone is sitting back thinking that the Fed is going to continue their low interest rate policy. The one strength within the side of the entire market has been the corporate buybacks. That's really been where a lot of the buying has been coming from. They're taking advantage of low interest rates relatively, and the longer that occurs, the longer they will have the ability to buy back their stock and play their little arbitrage game. But I think that it's going to be coming to an end, and I certainly think that the economic data today and a lot of the retailers have been suggesting that things are really slowing down. Walmart and Target, they're all struggling.
From the data today also, right?
Yes.
You said about the interest rates. That's interesting because yesterday the 10 years reached the lowest, right, in terms of the yields.
Yeah.
10 months.
That's right.
We haven't seen it. Was like a record almost, right?
And so my personal opinion is I think that interest rates are telling us that basically some very, very weak period is coming. And I think they've been telling us that. The Fed says they're starting to sell, but yet bonds are still going up. So that doesn't make a lot of sense. And I think something much bigger is on the playing field coming.
That brings me to your article that I read.
Yeah.
Selling may go away, maybe yes, maybe no.
Well, we were very bearish coming into the summer. Everything is pretty teed up. You've got a lot of insider selling. You've got a lot of sentiment, very high. The markets people keep thinking it's going higher and higher. And we feel like that everyone is very, very vested in the markets at this point, and that correction would be very healthy, but we're expecting one.
Actually, everybody's expecting, right? But why is it taking so long? Why we didn't see the sell in May? Because we saw, what, a 4-day rally that snapped yesterday only.
Right.
And still there's a momentum that's being built up. Is it artificial? Is it some players left in the market? And what is the big thing that you're talking about? What is there something big? But what is it, 20%?
Yeah, I think that we
10%?
could easily have a 15 to 20% correction is what we need to really clean the houses. You were asking just recently, the last 2 weeks, we've had this powerful move back up from the selling that occurred. One of the things that I'd like to highlight is that as interest rates going down, a lot of the investing has become very quantitatively driven at this point. And with lower interest rates, they actually see the stock market as a better way to invest than the bonds. So they're moving out of bonds and buying more stocks. So it's just a big switching program that's occurred over the last month. But I feel like that the earnings that you're paying for the stocks at this point is just too inflated.
So what is your suggestion to your clients? What do you do in this kind of a uncertain,
choppy, risky.
Yes, choppy, risky. Yes. What do you say?
So this is where the alternative in the hedge funds that people have been complaining about for 4 or 5 years, how they've been underperforming the indexes for this entire time. This is a period of time now where they operate on a relative basis. So they don't really care if the stock market goes up or down. They just want to make money on a relative basis because they're long and short 2 different things. So, and I feel like that the alternative strategies are a great place to be right now.
No, good advice. Thank you so much for coming.
Thank you very much.
Thank you.